Good morning, children. How are you? Hope you all are fine at home. I am also fine, students. Very good. Shall we come back to our lesson, final accounts with adjustments? And with these adjustments, we have completed around 5 adjustments. Isn't it? Totally 5. Number 1 is closing stock. Just a reminder, I will explain to you where it will appear. Okay, what we should do, whether we should add along with that one or deduct, okay, and where it will appear in the balance sheet. Closing stock will appear in the one place trading account credit side, isn't it? Then another one balance sheet asset. Second one outstanding expenses. What we should do, either in the trading account or in the profit and loss account, we should add along with the expense. Okay, then in the balance sheet it will appear in the liabilities side. Okay, then third one prepaid expenses, unexpired expenses. Okay, prepaid expenses also, either it may appear in the trading account or profit and loss account. We should deduct less from the concerned expense, and in the balance sheet it is an asset, current assets. Okay, current assets. Next one related to income. Okay, income accrued but not received. Okay, income accrued. This one in the profit and loss account credit side, we should add along with the concerned expense. Okay, then in the balance sheet it is an asset, current asset. Okay, then income received in advance. Income received in advance. This income received in advance also in the same profit and loss account credit side we should deduct less. Okay, then in the balance sheet it is a liability, current liability. Okay, it will come under the heading current liabilities on the liabilities side of the balance sheet. So 5 adjustments we have learned. 1/3 of the lesson we have completed. That day we have yesterday we have seen the 9th problem. Now we will do the 10th problem. Okay, prepare profit and loss account of Manoj for the year ending on 31st March 2016. Okay, so in the books of Manoj, first we should write the number of the problem. Okay, exercise number 10 in the books of Manoj. What they have asked, prepare profit and loss account. So profit and loss account for the year ending 31st March 2016. Okay, first item is given the gross profit. So gross profit will appear on the credit side by gross profit brought down. Okay, 25,000. For each and every item you should check whether we have adjustments. Okay, next one, salaries. So that one will appear on the debit side to salaries. Here adjustment salary outstanding is given. So salaries we can write in the inner column 5600. Add outstanding, we should add, isn't it? 400. So total 6000. Straight to this one you have to write. Okay. 6000. Then insurance. All these are expenses. 200. No adjustment. For insurance, there is no adjustment, so we can write the amount in the outer column. Then discount allowed. To discount allowed, you write fully, okay. 400. No adjustment. Discount received, so immediately you write on the credit side. Discount received, it is an income. 300. Commission received. 100. Advertisement. Write full word, okay. Then printing charges. 375. Traveling expenses. 500. Stationery. Oh, commission receivable is there, isn't it, in the adjustment? Commission received 100. Add receivable. Accrued, okay. Commission receivable 100. So 200 is the amount. Okay. Here only we should write. Now I am not just tracking it down. Okay. I am overwriting, but it is visible. Advertisement. Stationery. Traveling expenses. Stationery. Now one more adjustment. Rent paid in advance. Only that one we have to do the adjustment. Stationery 75. Rent we have adjustment, isn't it? Inside we want to write inner column 650. Then what it is? Rent paid in advance, so less paid in advance. 50. 600. Interest on loan. 225. Repairs. 125. Office expenses. 55. General expenses. 875. Postage. 175. That's all. So now we need to add and find out the difference. Okay. Here 25,000, here all small amount. So this amount only will be more. we will add that one first. Okay, 0 0 5 5 2. Write the same amount here also, 25,500. Okay, so to net profit transferred to capital account. Okay, 5, 10, 15, 20, 25, 30, 35, 40. Then balance 4. 11, 18, 23, 25, 27, 27, 34, 41, 46, 46 plus 4. Here 5, isn't it? Once again, 5, 10, 15, 20, 25, 30, 35 plus 5 only 40. Then balance 4, 11, 18, 23, 25, 27, 30, 37, 37, 42. Made some mistake. 40 balance 4. 4 plus 7, 11, 18, 23, 25, 27, 27, 34, 41, 46, 46 plus 4, 50, balance 5, 5 plus 1, 6, 6 plus 8, 14, 15, 17, 23, 28, 31, 35, 39, 41. 41 plus 4, 45. Balance 4, isn't it? 4 plus 6, 10. 10, 10 plus 5, 15. Balance 1, 1. So 15,445. Okay, book answer we have got. Okay students, I think you are able to hear what I am explaining to you. So already 5 adjustments we have completed, isn't it? Now the next adjustments we should learn. The 6th item, interest on capital. What is interest on capital? The capital is the amount which is contributed by the owner or the proprietor in the business to run the business, isn't it? So here we prepare the final accounts to know the true and correct profit, accurate profit of the business, isn't it? And so we have to consider all the expenses. Here we have already learned one concept, that is the first concept, business entity concept. What is the meaning? The business is separate from the owner, and owner is the person who is investing money. So for that purpose, the business has to give back interest to the owner. Okay, the owner is investing capital. Okay, so they are considered separate. So owner invests money in the business and the business is paying interest for that capital. Okay, that amount. So first we have to, it is an expense for the business. Since the business is paying interest, we have to prepare the journal entry. Interest on capital is an expense, so we need to debit. Interest on capital account. This is the adjusting entry. Interest on capital account debtor to capital account. Because interest on capital is an expense and this amount will be added along with the capital. That is say we are again crediting the capital. So we can write interest on capital provided. Then one more entry will be there. That one is the transfer entry. Till now we have not learned any transfer entry because we need to transfer this interest on capital to the profit and loss account. So we need to credit this expense and we should debit the profit and loss account. Profit and loss account debtor to this interest on capital. Interest on capital account. Then interest on capital transferred. Okay. Two entry. One is in adjusting entry, the other is transfer entry. Okay. Interest on capital adjusted and transferred. Then how this will be presented in the final accounts. Okay, how it will be presented, the presentation. It will appear in the profit and loss account, isn't it? Profit and loss account on the expense side or debit side. Then second place, it will appear in the balance sheet on the liability side. We should add along with the capital account. Okay, add interest on capital. First we should write the capital, add interest on capital. Okay, then it is how to calculate the interest on capital account. Okay, the amount should be calculated. Usually this interest on capital will be calculated on the opening capital. Okay, it will be calculated on the opening capital. Sometimes the business, the proprietor may withdraw or he may add additional capital. He may introduce additional capital. So we need to provide the interest on capital for the additional capital also. Okay. So we will see one example given in the book. See, the trial balance prepared on 31st December 2016 shows capital of 5 lakhs. Adjustment, provide interest on capital 4% per annum. Interest on capital, we should calculate, okay, the amount of interest on capital. 4% on opening capital. Okay. 5 lakh into 4 by 100, 20,000. Now the adjusting entry. Interest on capital account debtor to capital. Then interest on capital provided, we have calculated 20,000, that you write. Then transfer entry, profit and loss account debtor to interest on capital account, interest on capital transferred. Then presentation, profit and loss account to interest on capital. Then in balance sheet, capital, add interest on capital. Okay, understood? Shall we learn the next adjustment? Interest on drawings, just opposite to interest on drawings. We know the capital is the amount invested by the proprietor in the business. But what is the drawing? the amount withdrawn by the proprietor for his personal use. So why it is opposite? If he invests money, his business will be developed, isn't it? His capital is increasing. But if he withdraw money, if he draw money, that his capital will get reduced. Okay, that is why um, that first of all you should know what is drawing, isn't it? Amount withdrawn by the proprietor. Amount may be in cash or in kind also. Maybe goods also, what he has purchased and kept for selling purpose. Okay, that also he can withdraw. He can take and use for the personal purpose. Okay, and since we follow the business entity concept, we have to calculate interest on drawings. Okay, interest on drawings amount, and it is an income for the business. So we need to credit in the profit and loss account. And if he withdraw money often, his capital will get reduced, I said. So we need to reduce this interest on drawings from the capital. Okay, how we have to write that in capital at the beginning, then add net profit and interest on capital, then less drawings, less interest on drawings. So first of all we will learn the adjusting entry for interest on drawings. Interest on drawings is an income, so we need to credit, and what will get reduced? Capital. So the reverse entry, there we have credited capital, here we are debiting capital. Capital account debtor to interest on drawings account. Then interest on drawings charged. Okay. Okay. First entry, adjusting entry. Then the transfer entry. Then this must be debited, isn't it? Interest on drawings. And since it is an income, then in profit and loss account should be credited. Okay. Interest on drawings, transferred. Now the presentation we have to see where it will appear. Okay, we know this will appear in the profit and loss account on the credit side. Okay, then another place it will appear in the balance sheet. In the balance sheet, whether it is an expense or income. Their interest on capital is an expense. This one is an income. So that is an asset, isn't it? The balance sheet. The liability side, from the adjust with the capital. we will see one illustration. Okay, example. The trial balance on 31st March 2016 shows capital as 1,50,000, drawings as 10,000, adjustment charge interest on drawings at 4%. We need to calculate 4% on 10,000 drawings. So just to confuse, they have given, so don't take this one. So capital account data to interest on drawings account. Correct, isn't it? Into capital account data to interest on drawings account. Then transfer. Okay, interest on drawings account data to profit and loss account. It will appear on the credit side of the profit and loss account. Then in the balance sheet, write capital, then add, first you should write this one, less interest on capital, then less drawings. Okay, so only two adjustments we have seen today, so you have to learn correctly. Okay, so hereafter we are going to complete many exercise. Around half of the things we have completed. Okay students, thank you very much.